How concerned should we be, Gina? Are there a number of days at which we decide this is now a prolonged sell-off?
That's a good question. I mean, I think that, if you look at the sort of broader context, this is a sell-off from an extraordinary rally, so it's difficult to gauge where you should find it land. What I will say is that every sell-off we've had of the last year or so has sort of landed around the 50-day moving average on the S&P 500, found a bit of support there, and then persisted in its uptrend after that level. So where is the 50-day moving average? The bad news is it's all the way down at about 27.15 on the S&P 500, which would extend this correction to about a 5.5% level. Certainly feels really awful relative to the last year where we never even had anything more than 3%. But in the grand scheme of things of the equity market in the U.S., we tend to have an average 10% correction every 9 months historically. So 5.5% isn't awful. It just feels a little rough considering where we've been.
So what's concerning it? Is it earnings related, or is it a fear of inflation suddenly coming into the stock market?
In my opinion, it's a lot more about earnings than it is about a fear of inflation. There are some hints at the company level that perhaps inflation could become problematic for margins. And most of that is in the machinery sector within industrials. And then in the consumer space, I think we're going to hear a little bit about rising wages and what it will mean for margins in that space going forward. But if inflation were really a big problem for the equity market, we would see energy stocks leading, not lagging. Energy stocks in the U.S. stock market are the best indicator of inflation pressures. And they're not showing you that inflation is really a big problem. I think this is more about earnings. I mean, if you look at last week, what happened last week? Well, we started off the week with news that Amazon is getting into the healthcare space. That took out the healthcare sector. We had very negative news, or not very negative, but marginally negative news out of the tech sector, right? All of this enthusiasm over tax reform had really boosted most of the rest of the sectors in the S&P 500 for most of the year. Tech companies took larger charges and are not as optimistic about the outcome of tax reform. Then you get energy companies, which missed expectations, guided to expect a little bit less growth going forward. So you had sort of this broad array of sort of deflation with respect to the earnings outlook. That doesn't mean that earnings aren't still supportive of stocks. I mean, we're on pace for fourth quarter earnings growth of 14.5%, really strong earnings growth. But considering where we'd been, which is this persistent upward revision, this constant beat, this just sort of persistent drumbeat of very positive news with respect to tax reform, we weren't there last week, and I think that's being reflected in prices.